Hello everyone. In this video, we will be talking about accounting and its process. Let's start with the introduction. Accounting is a business language. We can use this language to communicate financial transactions and their results. It is a comprehensive system to collect, analyze, and communicate financial information. The origin of accounting is as old as money. 23 centuries ago, an Indian scholar named Kautilya, also known as Chanakya, introduced the accounting concepts in his book Arthashastra. In his book, he described the art of proper account keeping and methods of checking accounts. Gradually, the field of accounting has undergone remarkable changes in compliance with the changes happening in the business scenario of the world. A bookkeeper may record financial transactions according to certain accounting principles and standards as prescribed by an accounting depending upon the size, nature, volume, and other constraints of a particular organization. With the help of accounting process, we can determine the profit or loss of the business on a specific date. It also helps us to analyze the past performance and plan the future course of action. According to American Accounting Association, accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decision by the users of information. The American Institute of Certified Public Accountant has defined financial accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which in part at least of a financial character and interpreting the results thereof. Now let's move on to the accounting process. Accounting process refers to the specific task involved in completing an accounting process. The length of an accounting cycle can be monthly, quarterly, half-yearly, or annually. It may vary from organization to organization, but the process remains the same. The following chart shows the basic steps in an accounting cycle. First one is collecting and analyzing accounting documents. It is a very important step in which you examine the source documents and analyze them. For example, cash, bank, sales, and purchase related documents. This is a continuous process throughout the accounting period. Next one is posting in journal. On the basis of above documents, you pass journal entries using double entry system in which debit and credit balance remains equal. This process is repeated throughout the accounting period. Third one is posting in ledger accounts. Debit and credit balance of all the above accounts affected through journal entries are posted in ledger accounts. Now, a ledger is simply a collection of all accounts. Usually, this is also a continuous process for the whole accounting period. And the fourth step is preparation of trial balance. As the name suggests, trial balance is a summary of all the balances of ledger accounts irrespective of whether they carry debit balance or credit balance. Since we follow double entry system of accounts, the total of all the debit and credit balance as appeared in trial balance remains equal. Usually, you need to prepare trial balance at the end of the said accounting period. And the fifth step of accounting process is posting of adjustment entries. In this step, the adjustment entries are first passed through the journal, followed by posting in ledger accounts, and finally in trial balance. Since in most of the cases, we use accrual basis of accounting to find out the correct value of revenue, expenses, assets, and liabilities accounts, we need to do these adjustment entries. This process is performed at the end of each accounting period. Moving further, next one is adjusted trial balance. Taking into account the above adjustment entries, we create adjusted trial balance. Now, adjusted trial balance is a platform to prepare the financial statements of a company. Next one is preparation of financial statements. Financial statements are the set of statements like income and expenditure account or trading and profit and loss account, cash flow statement, fund flow statement, balance sheet or statement of affairs account. With the help of trial balance, we put all the information into financial statements. Financial statements clearly show the financial health of a firm by depicting its profits or losses. Next one is post-closing entries. All the different accounts of revenue and expenditure of the firm are transferred to the trading and profit and loss account. With the results of these entries, the balance of all the accounts of income and expenditure accounts comes to nil. The net balance of these entries represents the profit or loss of the company, which is finally transferred to the owner's equity or capital account. We pass these entries only at the end of accounting period. And the last step of accounting process is post-closing trial balance. Trial balance represents the balances of assets, liabilities, and capital account. These balances are transferred to next financial year as opening balance. Thank you.